Today's guest is Josh Foreman, the CEO and founder of Indebted. I first invited Josh onto the show in 2020, and I've brought him back to talk about their remarkable progress over the last 5 years. It's an amazing story, from writing the first line of code to now being the CEO of a fintech that's in 7 countries and recently raised 30 million US. Welcome to Fintech Chatter. I'm Dexter, your host and the founder of Tier 1 People, the executive search and recruitment firm dedicated to helping high-growth fintech hire exceptional people. But before I chat to Josh, if you're new to the show, make sure you give us a follow on your podcast player of choice. And if you're watching us on YouTube, make sure that you give us a like and subscribe. It really helps us get great guests like Josh onto the show. I'm joined today by Josh Foreman, CEO and founder of Indebted. Josh, welcome back to Fintech Chatter and welcome back to Australia.
Thanks, Dexter. It's good to have me. Good to be here.
Yeah, that's probably the jet lag kicking in.
You can tell I just got off the plane. Yeah, definitely.
Well, I feel honored that I'm the first stop on your trip back. This is now, I think, your 3rd time on the show, so we're not going to talk too much about the history of Indebted because we kind of refer people back. But for those listeners who don't know Indebted, could you maybe tell them a little bit about the big problem that you solve?
Yeah, definitely. So we're trying to fix an industry of debt collection. And so we sort of look at that across 3 dimensions: the way in which you contact consumers, the strategies you deploy to engage with them, and then how you ultimately treat them. So think about the consumer experience or user experience in more of a product set. And traditional collections is very much a phone call analog type of approach that is very lacks a data-driven approach to it, and then also lacks an empathy and understanding component. And so when we founded the company, it was very much about how do we stitch those 3 things together and sort of inverted. And so think of us as an AI-enabled collections business that basically predominantly uses digital channels to engage consumers. We use machine learning and AI to determine the strategies that we use to engage those customers, and we treat them with empathy and respect, and think of it more about how we help them become financially fit rather than sort of chase people for money.
So actually recall the first time that you were on the show, and I got really excited about you talking about the proposition, mainly because I'd recruited in the past for debt collection industry and known how difficult it was, not only from a business perspective, but also the customer experience as well. 5 years, I think, is since you were on the show.
Was it?
Yeah, it was 2020. I think July 2020.
Not much happened that year.
Yeah, but I think there's obviously a lot has happened, but technology has evolved as well.
Yeah.
How has that kind of shifted the Indebted solution?
I think it's definitely relevant in the last 12 months. So I think the business has evolved as you would hope, and I think we've had to overcome scaling challenges, particularly from a technology perspective, sort of going 2020, and I'm sure we'll unpack this as we go through today, but going into more markets, and that presents challenges. I think the last 12 months with all of the AI work, particularly the generative AI stuff, is the craziest period that I remember, both in my sort of 9-year journey of Indebted, but even before that in prior businesses. So I think it is at the surface level starting to obviously touch the org, like I think it is for everybody. I'm sure you use ChatGPT every day, and I was using it on the plane on the way down here, but it's now about how does that then actually change the overall offering and solution. And there is very much exercises happening where it's like, with a blank slate of paper, how would we actually approach the business today, both from a technology perspective and a people perspective? But it's very much like it's iterating and changing by the day, because that's what's happening with the tech.
It's amazing, I think, over this last decade, I think of every conversation that I've had, whether it be with a bank CEO or a founder of a 10-person business, the kind of innovate as dilemma has just got more and more it's intense every year, right? And it's kind of now you constantly every day asking yourself, is what we're building today even relevant?
Yeah, totally. Well, I was reading, there's a letter sent from Toby, the CEO of Shopify, to his team, I think it was overnight in the US, and I was reading through it on X or Twitter this morning, and it's pretty remarkable. It talks about how they need to evolve to work in an AI world. And so talking about, AI utilization and AI effectiveness, like how well you use the tools is going to impact in like performance reviews now moving forward, and like monitoring utilization and like how many users are doing 1 request a day versus 10 requests a day, and no more headcount requests across the entire of Shopify unless you've proven that you cannot do it with AI. And so all of these things, I think, like are evolutions of everyone looking at going, where is the leverage point here? And it's exciting, but it's also, like you mentioned, the innovator's dilemma piece. I definitely think back, well, what would it be if we were at day one now? And I know it would be a very different journey. And so how do you still look after the beast of the business, right? We've got a big company and hundreds of employees and go do all that. And then at the same time, take a step back and think about how would you almost innovate yourself out of that equation. And it's a challenge. And I think, obviously, it's not to the same scale that a big bank or a large enterprise would have to do, but it's still not as easy as it would be if we were 5 people starting today with a seed round and approaching it differently.
I probably will talk to you a bit more about that as we go through the conversation, but just back onto, I guess, the indebted problem and the kind of solution. Are you geared towards consumers or are you geared towards B2B?
Almost exclusively consumers. We bought a business in October of last year, sort of another product to sort of bring a software angle to the business. And that definitely has a bit of utilization around the SME space. But if you look at it from a percentage of revenue, like 99.5% is consumer. And that's by design. That is really where the TAM is for us. It's enterprises engaging with consumers to help them recover debt. So think of that as a credit card company or a telco or utility, et cetera. The SME space is just complicated, whether it's small or whether it's large businesses, just because usually when you're getting into that area, if it's a very small, it's more like a consumer. It's an individual director, and so therefore it's like a one-to-one engagement. If it's a big business, then you're dealing with administration processes, legal processes, and stuff like that. And it just doesn't lend itself as well to technology and a solution like that.
And how have you, because consumer fintech, I think, is much harder to make successful than B2B. How have you, I guess, kind of navigated that challenge? And you're now in what, 4 different countries, is it?
7.
7, wow.
5 properly, and then 2 very new. Yeah.
Right. So how have you actually kind of navigated that early growth period to get the scale and momentum that you need in a consumer-led fintech?
It's interesting because I think like on a pure B2C basis, like if we were a Revolut or something like that, I think there's a level of hard that comes with that that's unique. I think we get a little bit, to an extent, in some ways easier because I look at us as a B2B2C business, that we will engage let's say the creditor, think of that as a bank, and then work with them to engage their consumers. But in the same vein, we also then have this consumer, focus piece, which is challenging because we have a need that, if you think about the business, the predominant communication that we're doing millions of messages a month, are to consumers. And they know Indebted as a brand to help them, repay their debt. At the same time, we then have to position the brand towards, hey, fintech, or hey, bank, this is why you'd want to use us.
So I guess a little bit like the kind of BNPL side where, you look at the success of Afterpay and it was, hey, merchant, if you want to see your sales go like that on Saturday, use this. And then it was consumer, hey, if you want to look like this on Saturday night, but you don't have a credit card, use this.
And I think I think that's a great analogy because if you think about Afterpay, I think what they did so well, and Klarna has done the same, and as a firm, and Zip and others, is they leverage the consumer side to help them win on the business side. And so it was, yes, obviously, Afterpay walks in and wants, brand A, let's say it's David Jones. But what they can also bring David Jones is we've got X millions of Australians who love our app. And so you want them to shop here. And I think we, to an extent, try and do the same thing, which is we want to be front of wallet. When the consumer has the capacity to pay, we want them to pay us/our clients first because of the experience they had with us. And so I remember very early days when we raised our Series A, Dean from Carthona, our investor time, was like, doubling down on the consumer feedback, the fact that we got these 5-star reviews from customers in collections, taking that and using that as the marketing collateral to go win clients. And that has held true pretty well. It's evolved over time. But I think this idea that we are who consumers prefer to engage with, and that's why business A you should work with Indebted. But threading those 2 needles is very difficult from a marketing and brand perspective.
And so the kind of traditional model was buy debt
Yes.
at a discount and try and recover it. how have you kind of changed that model, and how are you kind of disrupting that model?
It's a very relevant, timely question too, because there's a lot that we're thinking about in this space right now. But ultimately, so debt buyers still exist, and some of the biggest players in the world are still in that category. So in Australia, Credit Corp is, ASX 200 business that it does exclusively that. I think by design of the virtue of the fact that we've become we're a technology business and we're chasing sort of technology type sort of financials, i.e. we want our business to look like a software business, we can't be a balance sheet heavy company.
Yeah.
And so we've always sort of said, okay, well, we won't go into debt buying. But that's also been validated in that you've seen data from a sort of macro level where, 2 out of the 4 big banks in Australia haven't really done debt sale for the best part of a decade. The volumes in the other 2 are small. In the US, you've got a dichotomy. Bank of America doesn't sell, but Citi does. And so what you've seen is like overall debt volumes, I'd say, have been pretty low. And you do that with also the broader macro of like interest rates were low and everything else. That has definitely shifted in the last 12, 18 months. We're seeing debt volumes surge. The buyers are active. The large publicly listed ones in the US have deployed more capital in the last probably 12 months than they have in the last 3 or 4 years. And so there's a lot of volume going out there. So we've done 2 things. One is, particularly in the United States, we're working with those organizations. So those people that would usually be viewed as competitors to us are actually really great clients of ours now. So they recognize themselves that they're trying to transform internally. They don't want to be these 9,000 FTE organizations. Yeah. And so they're embracing sort of technology leaders like ourselves to be able to help them. And we really like that. That is a bit, I'd say, geography specific. That's a very US common thing. Australia's less so.
Yeah.
But that's how we approach it today. And then, I mentioned the timeliness because we're trying to think about, well, how would that evolve? The part that I like about debt sale is not the sort of arbitrage opportunity of someone buys it for 1 cent and makes 3. I like it as almost a product feature whereby a client, let's use the BNPL example you mentioned before, wants to be able to pull a lever of liquidity where they want to be able to get access to $2 or $3 million, and the choices are go and take a loan, do whatever, or liquidate these overdue accounts that I have. And so that's where I have a lot of interest is how would I be able to productize that as a feature, put it in front of our clients. And so whether it's a Zip of the world or an Afterpay, they can log in and go, well, we've got X number of accounts placed with Indebted. This is their historical recovery rate. They're offering a slight arb on that, but I get all the money today. Yeah. And the consumer still gets the exact same great Indebted experience they had before. So I like it that way, but still early days.
And then on the flip side, you got the debt consolidation piece for the consumer.
Yes.
Is that kind of something that
I've toyed with that idea a few times.
Right.
It's hard. It's hard.
It's been a lot that have tried and failed as well.
Yeah. Passion project-wise, love it.
Yeah.
It's funny, I had this conversation with actually a founder of a very similar business to Indebted in Colombia recently, and he has the same level of enthusiasm I had in the early days. I think the business model is the challenge with that one. But it's ripe, and what it needs to happen there, what has happened in collections, whether it's an Indebted, a True Accord, or a Pair Finance, like all these great companies that have done a really good job in changing the consumer experience in collections, that has not been done on the debt consolidation side. And when you pull through the business models, it's as predatory as you could get. Yeah, it's not good.
So I want to talk a little bit about the journey that you've been on this last 3 years since you were last on the show. I think at the time you just launched, made an acquisition in the US.
Yep.
That sound about right?
Yeah, right. Yeah. 2021.
So your kind of business was a little bit more simplistic.
Feels that way.
Do you want to talk us through this last few years then, and how you've kind of evolved from making that first acquisition in the US and the journey that you've been on?
Yeah, definitely. So it's I look at it across a couple of areas. So context, we decided to go into the US market in 2021 on the back of an expansion into Canada in 2020 that sort of those clients dragged us into the US. For a whole bunch of logistically complicated reasons, we bought a business in order to get the licensing infrastructure in time that we needed. And so we spent 2021 both digesting our first acquisition, never done one of these before, and that was fun. Particularly on the other side of the world, we couldn't travel, all the COVID stuff was still overhang. And then we also launched our core business, our own product, and those clients from Canada in that example going live in the US about mid-21, and then we were scaling out from there. So it was still early days coming into 22, but things were starting to work their way through. I think the challenges for us were, and I guess the evolution was multifaceted. One is the acquisition went incredibly well, which is a good thing. but we didn't really expect it on its own to grow at the same time that the US business organically was growing. And so very quickly as we entered 22, I'd say by mid 22, by end of the fiscal, we were looking at like, hey, the business is now predominantly US. And we were an Aussie exec team that had just sort of, I think my first flight back to the US was like Jan of 22. So it's sort of a really weird scenario in that regard. And so that meant a huge shift. And obviously, how do you support the majority of your clients being in another market? And there was a lot of growing pains, and there still are, of how do we shift resources, both exec team presence, local presence, client presence, engineering presence, et cetera, to be able to sort of adapt to that. So that was one big piece that was unfolding. At the same time, though, we also realized we unlocked a new growth lever in that M&A piece. And we've done, obviously, and we'll talk about that in a moment, I'm sure, like we've done a few more of those transactions because that became like really insightful for us. There was a list that goes out to here of all the things you don't want to do. And we've gone through all those, but there was a lot of really powerful levers as well in terms of growth acceleration and speeding up market entry and being more successful, having sort of boots on the ground, so to speak. So that was one big part. And then that sort of catalyzed also, well, how do we then go from, call it really 2 markets in Australia and the US, we had a couple of small ones around, to now where we're looking at the business, which is, our plan to get to 30 markets over the next 4 or 5 years.
So talk me through some of the other markets that you've gone to.
Yeah, so we're in Australia, New Zealand, Canada, US, UK, Mexico, and the UAE. With UAE and Mexico being like UAE was last month and Mexico was just before Christmas. Take a step back. Why do we go anywhere and sort of what's the rationale? Almost exclusively it's driven by clients. We today, over 2/3 of our revenue is coming from clients that use us in more than one geography. That's become a real competitive advantage and part of our growth flywheel. So, think about, you get Klarna in Australia when they came here, that was great. But then, we're in New Zealand, they go to New Zealand, like, oh, great, we can use the same supplier. And then we've leveraged that into Canada, into Mexico, and places like the US as well. And we think that's a pretty, good path for us to follow because, Stripe did the same thing with early customers and there's other brands that have done it. And it helps to reinforce that stickiness and also makes the value contribution that we provide better. And also gives us confidence in terms of, well, what do we know about Mexico, right? Like it's a beautiful place to go on a holiday, but I would never run a fintech business there. Yeah. So how does that manifest itself? And it's a lot easier when you have an anchor client that trusts you and you can work through those things together. So that's sort of the main rationale. And then we also look at that from a market dynamic perspective of, okay, well, what does it have some of the properties we'd want to see for fintech to thrive? So I'll give an example of market I'm spending a lot of time looking at right now is Brazil. So you've got Nubank there, which has become one of the best fintech success stories that doesn't really get spoken about, even though it's a large publicly listed business now. But you've got a bank that originated sort of just under a decade ago, now has 110 million customers, which is insane. Yeah. Like we know here in Australia that like the consumer banks is Westpac and CBA. Imagine tripling that level of penetration in the customer base, where like 2 out of every 3 Brazilians use Nubank. That's just insane. And so to be able to do that, I think is incredible. At the same time, they're growing and they're also starting to follow what you're seeing with the Revoluts of the world and others, where they're not just dominating Australia like a CBA would, they're now going into Mexico, they're going into Colombia. The most recent chats with the CEO that they've done publicly, it's pretty clear they're looking at the US, they're looking at the UK. Yeah. And so we think that's where fintech's going. We think those global brands are going to be the ones that win, particularly on the lending side. Yeah. And we think better to be the platform to support them than to be like the leader in Australia or the leader in the US. That is going to mean we're trading off some things in the short term. But if the bet's right, we'll win on the long run.
One of the things that I've been pretty vocal about over this last few years has been the kind of embedded finance piece. And it's not that I don't believe that it works. I just think it's really, really difficult if you're a startup trying to get funding to solve and tackle these problems. I look at Wise platform as example. Nubank's one of their customers. 5 years of building, 500 people, hundreds of millions of dollars invested in it. Massively complex problem to fix. But when you do, then you start to work with Nubank and Standard Chartered and Morgan Stanley and everybody else. What have you found has been the biggest learning for you, kind of going from the early days of Indebted, where you were extremely talented founder but didn't have the experience, and you were on the tools. And kind of, I remember talking about that first time, where you tested the product and it worked, and you're like, wow.
Yep.
How have you kind of evolved your thinking around, this enterprise solution, enterprise platform, and what it actually takes if you're going to, compete on the world stage?
Yeah, it's a great question. I think the things I've taken away are, so one is, as the business has become more successful, my belief in what the company can be has also accelerated almost exponentially, which is usually the inverse. Like I had this conversation with my COO this morning, actually. It's like, if you had asked where we would have been in year 3, would you think we would be where we are at year 9, 6 years later? And we both can unequivocally say, like, no, there's no way. Like, there's no way we would have thought we'd been in 7 markets, be at this number of revenue, et cetera. So if you apply that same dimension and go, okay, well, now we're at year 9, what do we think we'll be at year 15? It's actually, when you have like a 4x or 5x growth target, you sort of go, well, we did like nearly 10,000x on the 9 years before. Like, is that really the case? And I think when you look at some of the parallels in companies like Stripe, when you look at Wise, you mentioned is another great one, Revolut, you look at how long it took to get to whatever number, 100 million of revenue or $1 billion of revenue, and then you look at the more recent years, and that chart just starts to accelerate. There is a level of like scale advantage. The best one I've seen with Stripe recently was a new product that launched like 18 months ago, and it's already at 500 million ARR. And you can imagine how hard it would have been to get 500 million ARR at the beginning of the whole business. And now you can incubate a product and it go and does that. So I think that, why that's important for me is now that's helped me reframe just how big we think the business can be. And also that I think the business is going to evolve way beyond collections. And I look at it more like credit infrastructure, which we can unpack later. But our clients need more things from us. They don't just need you to collect the debt. They want the software to do things internally. They want the data to be able to make decisioning. They want backup loan servicing support. They want a whole bunch of things. And so I think once we build that foundational platform, that's one. The second part to answering your question on the tactical side is having the time to be able to look back, like you said, get off the tools and actually go, okay, what was it, if you deconstruct it step by step, that actually got us to here? And so like I did that exercise in Christmas, sort of January of this year, like really looking at both the M&A component, the organic component, the multi-market component. And when you do that and get the time just to really dig into the data, you start to see that like there are absolutely playbooks playing out here. And then how do you execute across them? And whilst I'm not close enough to know, the Revoluts and the Stripe details, you start to see some similarities there for sure. Like following Uber into all the markets, which is what Stripe did in the early days. And Revolut now seems to launch, like, I don't know which country they're not in. Right? Like it's every single day. It's like they're everywhere. And so there's obviously something there that's played out. And then you're starting to see that manifest whenever I see, speak to investors. Last number I heard is like 3 billion ARR growing at 100%. It's like, how do you have a bank that charges fees, not interest, and it's doing 3 billion of annual revenue and growing at 100%? Something's worked, right? They've got a playbook and they're executing it really well.
I want to talk a little bit more about the credit infrastructure piece that you just talked about. 2 reasons. One is I'm really curious, but 2 is that if I look at a common denominator between what I would class as the Aussie success stories in fintech, and there's a few, but 2 of them that really stick out. Caliber, the founder, but also their intellect and problem-solving capability that has resulted in them creating a new category. So I think Spriggy, right? I think of BNPL, right? Like so, I think that you're talking to you about Indebted. It's almost like you're creating a new category now. That bits of it have kind of existed. Like Spriggy, right? You had Dolomites accounts, right?
I had one. I had one of those.
So I'd really love to understand your kind of thinking and your thesis around, the credit infrastructure piece.
Yeah, so I think the first part I'd go back to what I mentioned before. I think the global brands are going to win. And when you have to do things globally, like you mentioned with Wise before, it's a perfect example. It's so complex, right? So where do you even start? So once someone has built that infrastructure and the plumbing, I think it's too good. The best analogy for us is, we use Stripe for our payments. If we had to do a different payment provider in every single country, all of these countries that I mentioned to you that we've been in and that we're in and that we want to go to become infinitely harder because we have to do different payment integrations. We can't get scale, a whole bunch of challenges technically, et cetera. And so my bet is by having that sort of distribution layer on our core product, we will be able to sort of fill that part of the piece. And then the natural sort of extension that you mentioned is like from a category perspective as well, where do, like, and I also like to look at sort of the businesses that I think have been very successful tangentially to what we do.
Yeah.
So rather than looking at like the Credit Corps and that of the world, which are phenomenal businesses and they've done really well, I look a little bit more at some of like the Experians and the FICOs, et cetera.
Yeah.
And what you sort of see very clearly is it's about following the customer life cycle and becoming vertically integrated because you become more valuable to those organizations. And it's easier to sell to people who are already customers than it is to the ones that aren't. Another great example, cybersecurity business in the US, Palo Alto Networks. You know, what became a one product hardware company is now a cybersecurity platform with a $190 billion market cap. And what they knew was they said, we already have all of the clients. They buy these little bits of hardware for us. Why don't they just buy all the software and all the add-ons and all the IT services and support from us? That was the thesis. Nikesh and the team did a really good job and executed, and you've got a business that's gone from 400 million of revenue to 9 billion of revenue. And so my thesis is around that. It's like we are right there, and I don't want to get into originations or areas we don't have a right to play in, but on the tangential of where we are, it's like they need us to collect debt. Okay, great. But also they need backup service providers in the event that their lenders aren't, comfortable with it. Why aren't we playing in that space? They need data to make informed decisions. Like we have so much BNPL data and customer data and insight data and stuff like that. Why can't we support that? And so it's what we're trying to understand is what's the boundaries of where we should play, and then own that space really well, and then grow vertically inside those clients, and then hopefully create a bit of a flywheel effect where as one client comes onto one product, it becomes easier to sort of get multi-product, and the data you get there help sell the next logo that you want.
It's gone off on a bit of a tangent, but I think it's one of the reasons why marketing seems to be at such a crossroads right now. And I think it's kind of what I'm seeing in marketing at the minute is, this approach that you've got, right, which we're starting to see now, the flywheel comes into effect. It's very difficult if your mindset is, B2B or B2C rather than customer, and at what point in that life cycle is the customer? And if they're a client, they're still potentially thinking of it through a customer's eyes or their customer's eyes.
Totally.
So I think it's a really fascinating kind of, paradigm shift that we're seeing that a lot of people are struggling to really grasp with right now.
Yeah. And I think that it also, it manifests a lot in terms of how you position yourself as a business. Like we speak about this like it's literally a recent conversation as of the last few days, but thinking about the brand of the company and how you want to be positioned and where you balance that between, okay, this is core and what I want to do. So from a marketing perspective, like how do I generate business with also ambitiously, I want to go into this area and I don't want to box ourselves into this. And so we want to be able to have those exploratory conversations. We want people to think of us as someone maybe to go to on these things that maybe we don't even do today, so they can feed into how we think about that sort of ecosystem we want to build. And I know I mentioned Stripe a lot, but I think they just do this so well because if you just go to that product page and you compare it to where it was 5 years ago, all of these new services have manifested. All that's come from is customers saying, well, you do this for me, right next to it is this and you don't do that. And if you did, it'd be awesome. Like I need you to help me find fraud because I'm processing $1 billion of credit card payments. And it's like, now you've got this fraud product that's one of the best in the world. And then you've got this card issuing product. And then, hey, most businesses are online, but they also have in person. And so there becomes a terminal business. And I think that's a great way to think of building a real platform company. And I think, Revolut's another one we talked about a lot, but you go to that website and there is the business and there is the consumer page, right? And they are two totally different markets, but really one unified view. And I think for a long time, people thought that couldn't be done well, right? Like you're either the business bank or the consumer bank, and one does one well and one can't do the other well. And that's not so much true. And now we're seeing in these new businesses.
Yeah, I think the key is listening to customers.
Totally, right. Real proper product management, right?
Yeah, and solving their problems, right? It really is that simple.
100%.
So we've talked a little bit about the growth. As a leader, as a CEO, how have you adjusted to now managing a global business, and what has that meant, I guess, kind of for the culture of the business? And I'm thinking very much from the perspective of you're now operating 24/7.
Yeah.
Like first of all, when do you get the opportunity to switch off, and how have you coordinated resources so that you can operate that kind of 24/7 business model?
So very transparently, like it's a work in progress. It's not perfect by any means. And I think this is actually where I think being a startup is a good thing, because you can iterate fast and you can manage things. So what worked well for maybe 22 to 23 was good. And then it started to break in 23, 24, and then you fix it, and then it starts to break in 24, 25, because you've got different dimensions. So I think we've done a few things. One is I moved to the US where the biggest market was. That was a decision between myself and the board to be where the success of the business rested. So that was sort of step number one. I think that helped in the sense that you're in front of customers, you're in front of clients. You can spend that time with them, understand local talent. I think you have to be where the gravity is.
Yeah.
Now that may shift soon where gravity is over 30 countries. I don't know how to do that exactly unless I can replicate myself. But I think like that's step number one. The other part then is sort of how you think about sort of org design. And I think this is a part where, again, transparently got a lot right and got a lot wrong simultaneously. I think for me, what has become very apparent now is that there's a very big difference between a market that's sort of in its early days of its journey and a market that's doing $30 million of revenue and has 150 people. So we're very much now, and this is again, literally over the last sort of 3 months, it's starting to bed down. It's plenty of teething issues we're going through, but really regionalizing the business.
Yeah.
I look at what I did when I moved to the US and I say, okay, well, how do I now replicate that? And so you need to have a MD or president in that part of the business. And it's easy to do that. So we hired someone, but then they can only be as successful as the infrastructure that supports them, right? So if you're there and you're like, great, I'm the top dog in the US, I can make all the decisions, except I've got to wait for engineering to sign on in Sydney. It's currently a public holiday. How does that work?
Yeah.
Right? And those are the challenges that we're trying to now understand. It's like, well, does that mean you rebalance? But then there's a cost differential. I don't know if you looked at the Aussie dollar in the last 24 hours, but it's basically double the cost, right, to put it into the US versus Australia. And so how do you balance those things? So it's very much a iterative process and trying to understand where do things start to work and where are they just like we're hitting constant roadblocks. And so I wish I said I had it perfect. I don't, but definitely trying to move, and this is probably the major overarching thing for me, is trying to move at the speed of a startup. There's a lot of, I think, things that bureaucracy that creeps in as you scale. Okay, this looks good. We're going to reorg. We're going to spend 6 months. But probably going to need to reorg again at that point, or need to at least rethink about certain structural elements at that point in time. So waiting 6 months and planning that out doesn't necessarily help because other things are going to change then. 2 new markets are going to launch and we didn't think about X and what about Y. So very much trying to be able to iterate at speed and get that working. The next 3 things I'd say that I think is relevant, particularly to the audience, is I think I really like the benefits that remote work has brought, but I personally miss the office a lot and I miss a lot what that brings. Does that mean it's 5 days a week or whatever? No, it doesn't. I think that's up to each individual business, but there's something from a cultural building perspective, what you mentioned earlier, around the people that you've been in those trenches with before, where it's not like someone that you only know over Zoom.
Yeah.
And so I think there's something about, this is why I'm leaning to the regionalization model, the ability to build these hubs. And I think that I see Klarna's a great example, giant global business, but the whole exec team's all in Sweden. And they've stayed true to that the whole time. And so there's lessons there, I think, in terms of it. And then you see the opposite angle as well, where they're completely dispersed and around, but trying to understand the right balance between that nice, efficient, agile global structure with a proper regionalized business that can independently run its own time zones and things like that. And then as for me switching off, that doesn't really happen too much, but I try to as much as I possibly can.
I don't want to get too kind of airy-fairy, but I think the example that you gave before about moving to the US and immersion, I think we have to remember that is kind of biological machines, right? Or sensory, kind of, we've got so many different sensors that are actually data collectors.
Totally.
And for you to sit here on a screen doing Zoom calls and researching stuff about the US versus being on the ground and absorbing everything, right? I know it sounds weird, right? But smell, sound,
100%.
right? People's body language, the whole stuff, you just kind of go, okay, I'm on the ground and now I get it.
100%. I couldn't agree more. It's funny, Danny, one of my investors and board members, has this thing with me. He's always on me about basically documenting my algorithm, he calls it. And it is those things that you mentioned. Yeah. And perfect example is when I went to the Middle East, went to UAE and Dubai to spend some time with one of our clients. This 3 years ago was just like a organic conversation between 2 board members introduced to this $1 billion, growing business in Dubai. And I could tell straight away, like, this is the like, we will be here one day.
Yeah.
And it wasn't just because, like, I wanted it to be that way and then we pushed it. It was all of that qualitative piece you mentioned. Like, I walk around and I'm like, okay, this business has got the culture that's going to take off.
Yeah.
It's already got the run rate. It's a buy now, pay later company that's exploding. There's a whole bunch of market dynamics that present itself. And sure enough, like, you know, that $500 million business is a $4 billion business today. And guess what? Like, quick couple of conversations, you realize there is no Indebted over there or True Record or equivalent. And you're like, there's a gap and it's gonna happen, and it did. And I think to your point, that's all the stuff that you don't get over a Zoom call or over reading a ChatGPT output. It's when you're actually speaking with customers and you're there and you're like, hey, this is the right market for that to happen. Whereas like I've been to other places before, I'm like, yeah, this is a great market. I'm sure the TAM is huge. You can just tell like this is just too hard, right? Like I think India is a great one for us. There's a lot happening over there and there's a lot of investment in collections, but in the few visits, I just don't know where like we're gonna have any advantage right now. And so it's just, yes, it's a huge TAM and that could excite an investor on a slide. Execution's hard. Whereas here's another TAM that's a lot smaller, but I think we can get 50% market share.
Yeah.
And so let's run to that one.
It's amazing though, right? When you hear about all the narratives out there about what makes a great founder, and it's, this sell the story and it's all about selling. None of it's about intuition.
Yeah.
And intuition for me is like the number one indicator of their success because that feeds through into everything. Customers, opportunities, talent, decision making, strategy. Gut feel is like, it's called gut feel because they're like the biggest, I think, collection of nerve endings is actually in your gut, right? So it's kind of saying there's something not quite right here. I can't quite put my finger on it, but I'll figure it out sooner or later.
I gave this feedback to one of our execs recently, which was just that. It's like your intuition is the data. It was like, but I don't have the data down. I'm like, well, you do. You're just collecting it in a different way. You haven't put it in Excel, fair enough. But like there is a tipping point where you have to go, I know this is the right thing to do. I'm going to opt for speed and momentum and get it done versus waiting out 3 months so I can put in a spreadsheet to know what my body is already telling me. And I remember one of the early exec coaches I had basically spent nearly a year with me on this exact thing. It was like, you are leaning too much into the data, too much into what book A says you should do or blog post B, and you need to go back and default to intuition. There's times where you shouldn't, of course, and understanding when to balance that. But like, it is a very good read, particularly on things that are, when you do something for 9 years, there's a lot of data collection happening.
Exactly,
right?
exactly. I say the same thing with recruitment, right? It's like, just talking through your algorithm and your process, right? And I've written all of mine down as well. And there were just little things like, I was talking to a colleague and they were giving an offer and I said, hey, you're giving it on Friday afternoon. It's the worst time to give an offer because they got the whole weekend, right? But what you need to do is to say to them, hey, I need you to call me at 8:30 on Monday. I don't need an answer. I just want to understand how you're feeling.
Right.
If they don't call you at 8:30 and you're calling them at 9, they are not accepting that offer. They might tell you that they are. They might give you all these other reasons, but they're not accepting it, right? And here's why. And I think it's kind of those experiences that you have, right? And 100%. Just the pause in their voice or their, just all of these things that come together when I think it's really about, kind of craft, right? And we don't consider being a founder as a craft. And I think if we did, VC would have a much easier time figuring out who to put their money behind and who not.
It's so true. But you must be able to get to a point now, right, where you will interview an executive and you can sort of know, like, right away if they're a fit for that role, right?
Because, I mean, Revolut's a great example, right? So when I worked on the CEO search, which is 2019, but I got bombarded. It got out on market that I was doing the search and I was getting all these calls from EAs of banking execs saying, hey, my boss is interested and he wants to meet you on Friday at 10 a.m.
It's flag.
And you're like, but can't tell you now it's not a fit, right?
Yeah, exactly. Your EA is calling me.
But it's all of those things, right? Whereas, if I was a couple of years in my career, I'd be, oh, wow, a bank exec wants me to meet with them. No, I'm like, whatever.
Totally.
Yeah. So I think that it is those experiences that you just build up, as long as you're aware, right? And I think the key is, great advice around documenting it and creating what's your algorithm, right?
Yeah.
And it's not E = MC squared. It's like, hey, somebody does this, this, and this. 90%, certainty, probability that the outcome is going to be this.
And when it's not, like, I think rather than just getting, all distraught that a bad decision was made and, there's cleanup that has to happen.
Yeah.
It's like, how do I feed that back into
Yeah.
and like, why did that happen? Like, why I thought that was the right person, I thought this was the right market, and then just sort of using that to iterate, as opposed to being like, well, that data point suggests that I don't know what I'm doing, and so therefore let's discard it. I'm less of that. Maybe it's the optimist in me, but it's like, how do you take that and reiterate that into then go, okay, well, there was a reason why this one market didn't work where the other 6 did. If you can feed that data out, you'll hopefully miss the next 2 where you make the same mistake on the next 12 where you don't have that problem.
I just have to keep reminding myself as a business owner that problems are a privilege.
Yeah.
Right? And when I get my head going, oh God, what am I doing? Say, okay, problems are a privilege. Get onto it, solve it. Right? There's a solution.
It's hard. It's hard some days though, right?
Yeah.
Like it's just like every problem seems to be manifesting at the same time.
Yeah. But I guess that's the other trick, right? Is figuring out what's a problem.
Yeah.
You know, sometimes the best solution is to do nothing.
Yeah. It's often
just
yeah.
And I think it's resisting that urge of, hey, I've got to fix everything.
Yeah.
You know, I've got to, we've got to make it all right. And sometimes you just have to recognize that actually, you know what, like just leave it.
Yeah.
If it is a real problem, let that fire burn. It might just burn itself out.
I totally agree.
Yeah. So we're kind of moving on to, I guess, the future. There was some big news at the end of last year, Series C.
Yes.
Everybody's finding it and has been finding it tough since the last time you were on the show in 2022.
Yeah.
Of raising capital. I guess, look, what was the big secret for you? Because it was a fairly significant raise.
Yeah, I think, I don't think it's a real secret in the sense that investors are being much more diligent on placing their bets. Capital's harder to come by, so I think if it's harder for us to get, it means it's harder for them to get. So it goes all the way up the chain. I think LPs are being very conscious of who they allocate to, and therefore the VCs are doing the same thing. So we had to really touch on a couple of things. One is like we had to have our numbers in place, and so we still are, but we were growing really well. Margins were improved, and we'd really sort of heard the market in terms of swinging from sort of loss and growth at all costs to we actually hit sort of profitability leading into the raise, which was sort of part of the strategy. So demonstrating that like we can pull the levers. We don't think we'll ever go back to 2021 craziness. We will find the right balance point where I think there is a trade-off on profitability and growth, but showing that in the event we need to, we can pull that lever back. So that was helpful. And then I think the other part for us is we are doing something really unique. Yes, there's competitors, but you'd see it all the time. Like we're not another payments company. We're not another lending business. And so we definitely stand out in that regard. And also I think we're solving a real problem that people can see is like, okay, this is globally an issue. And the other part is the sort of other side of the macro. I think a lot of investors at the time were looking going, well, there's probably something that's going to happen here. Like there's, I think as of this morning, $1.25 trillion of consumer credit card debt. Interest rates are as high as they've ever been. Jamie Dimon's saying he thinks we're in a recession in the US and like the tariff stuff, and I don't want to get into all the politics, but like all that's melting down. At some point you can see there's a manifestation of a bubble here. And you've got this whole new wave of category of lending through fintech that is just exploding, right? Like people were thinking that BNPL was a fad, and now look at how many people are using the product. And so there's a lot of credit out there, and a key part of making the credit infrastructure work as we sort of push the business is the money has to go full circle back. If things don't get repaid, the whole process breaks. And sometimes a lot of people like to push back and say, like, why would you want to be in collections? And I get all the reasons why they mean that. It comes from a good place. But the other part is that the reason you pay X% on your loan is because of all the people who repay and don't repay, right? So if no one repaid, then yours and my mortgages would be 10 times what they are, right? So it's all about the risk-adjusted return component. And so it's a critical part of the infrastructure that enables people to access good credit is by virtue of making sure people repay. And I think there has to be someone to solve that and look at that at scale, and we want that to be us.
It's I've come up with an algorithm, given that we were talking about that, around what I think, certainly my observations here in Oz has been, the complexity of the problem, plus the size of the problem, plus the quality of the founders, will determine how much you're going to raise, even if indeed you are going to raise. And there've been only 3 or 4 fairly significant raises in fintech over the last 12 months. And every single one of them has been tackling a really complex problem that's global. and the founders are, top of the tree.
Yeah.
If you're not hitting those three things,
It's tough.
it's really tough.
What I think on the positive side, I would say, is that the Australian venture ecosystem's evolving so quickly now that I think that's exciting.
Yeah.
We had, and not by sort of ego or any reason, we didn't include any Australian VC in our process because we just assumed like it was just not going to happen. Like you're not going to get that ticket size. We know everybody already. They've passed before, and so like they're either an investor or they've passed, and so whatever it is. And so I spent 5.5 months, but literally flying between New York and London, back and forward, doing the process, and then only to end up basically taking Airtree and taking the team and end up back in Australia. And it's like, but what has happened, going back to that LP piece that I mentioned, you just look at them as a fund, and they're not the only ones, but the one I can speak to easily is like they're now diversifying away from just superannuation funds being the source. They've got university endowments in the United States and people in Europe and Asia, and so they themselves are looking and realizing that as you look to deploy more and more capital, keeping those returns where you want them to be is hard. And there are a handful of funds here in Australia that have these just outsized return profiles. Because to your point, when you do hit them, like Canva's probably the greatest one of all time. But like when you hit them, they hit the power law big time. And you've got I would say beyond category defining company in a brand like that is a once in a lifetime business that's been created, and it's created here. And so people look for that. And I think so that's helpful for Aussie founders, that I think you can stay focused and disciplined, touch those three things you mentioned, solve a big problem, do it really well, hit your numbers, and be a great team. And even beyond just the founder, make sure you've actually got a solid executive team. There is a rich ecosystem that can fund you here if you can get it right. So, and it's an exciting time for all the AI businesses. Like I spent some time with some at an Airtree summit recently and seeing all these like 3-4 person companies that are doing all this stuff with like no people.
Yeah.
It's like, this is cool. You guys are able to get a lot further than we were back in the day.
It just kind of takes me to my kind of final question. So you alluded to this before, we're in a moment that there's uncertainty that we've probably not seen since COVID lockdowns happened, with global markets and tariffs and everything else. What's got you excited about the future, and what do you see as kind of the path forward for Indebted and the Aussie fintech scene as well?
It's the most cliche tech guy, for sure. Like I'll say this somewhat tongue in cheek. I wish I was unemployed right now, because it is a great time to be spending a lot of hours in front of your computer, learning new skills and playing around with things. Because like it reminds me of what it liked when I was 14 building my first website, thinking like, oh, you can build these e-commerce pages and do all that. And you saw people do it, and then sort of leading into my first business. But we are at a point that this is bigger than mobile. This is bigger than Web 2.0 and cloud. This is like everything. There will be businesses that we can't even wrap our heads around created. And I think the bar has continued to be lower. Like you don't even need to know how to code anymore. Like you can teach yourself and do most of the work with ChatGPT with a $20 license. The orders of magnitude have come down. So I think the whole idea of not being in Silicon Valley or not being in New York or London, being an Aussie business, like I think all of that goes away. So it's really exciting. So I think all like, the macro stuff, just let that play out. Politics is fun to watch on television.
It is, it is.
Whatever it is. As far as what can be created and the scale, like I think there's been people talking about a lot. When will the first $1 billion business with one employee happen? It's going to happen.
Oh, it is, I said that on my podcast like 2 years ago. It's going to happen in the next couple of years. I listen to both sides of the AI thing, because I do think there's a lot of a hype cycle, and we talk about this internally a lot, and don't want to overreact to things. And investors like spend all this money, you see these crazy term sheets at crazy valuations. I think you have to put that in one side, but we are seeing the fastest growing companies that ever existed. Whether you think OpenAI is worth $150 billion or not, like it has reached its number of active users faster than Facebook, Google, or any business before it. And then there's all these other ones with Clay, and there's Base, and there's a whole bunch of the other sort of like AI native apps. I saw one the other day. I'd never heard of it. It's basically like you prompt it and it just builds you an e-commerce website. It's the fastest growing tech business in European history. And it's like they went to something like 15 million ARR in 43 days. And it's like 9 people. And so it's insane. And so that is real data. And so I think people need to just thread both of those needles carefully. I'm not fully sure we should be spending billions of dollars on new foundational models every day, but I'm not the right person to make that. But the companies and like real business problems that'll be solved, I think is real. Great time to just I think that's the beauty of it, right? Like ideas are back.
Yeah,
It almost
time.
feels like we're back to kind of, the early 2000s where Atlassian sprung from a garage and a credit card.
Yeah.
Right? It feels like those days are really coming back very quickly.
Yeah. And I think we'll be able to just there'll be such big unlocks when you get there.
Yeah.
Like I don't know if have you been in a Waymo, one of the autonomous cars yet?
No.
When you get in one of those, you start to realize that like there's a lot of difference between the talk and the reality, and like when the reality is here.
Yeah.
And like when you take a 30-minute drive in a car with no other people but yourself and it's driving itself, you start to go, okay,
Man,
like
sci-fi movie.
Right, sci-fi movie. But then you go and have a look at the numbers, and it's like there is more rides happening with that, I believe, in San Francisco than there are Ubers now.
Yeah.
And it's like it's happening right before our eyes, and yet you say to the average person, like, have you been in a driverless car? They're like, it's a fad. It's like,
Yeah, all these poor kids though are going, well, I say poor, it's probably great for them. There's no parents on the touch lane at soccer now.
Right, exactly.
Showing
To go through. But then they're not going to learn like how to drive, right?
Yeah.
Like, I had this conversation with a friend of mine who's got like a 1-year-old, and it's like, will she learn to drive?
Yeah.
Don't know. Probably not. And so that's a whole other sort of thing to think about, but it's an exciting time.
Awesome. Well, Josh, it's been really great to catch up.
Yeah,
Congratulations on all the
Thank you.
incredible growth. I mean, it's just awesome to see, and I keep thinking back to that first podcast.
I'm going to have to watch it now.
I think it was audio only, actually, but
was it?
Yeah. But we get some amazing talent listening to this show. If they are clued up on AI and they're using all the latest tools,
Yeah, please.
and they're interested in careers at Indebted, where's the best place for them to find out more?
Jump on our careers page or just reach out on LinkedIn. We'd love to chat and talk about opportunities.
As always, folks, you can catch up with me on LinkedIn. I'm back on Twitter or X as well. If you're new, make sure you follow us wherever you listen to podcasts. And if you're watching on YouTube, give us a like and subscribe. Until the next episode, keep well.